Let's give a round of applause to our next presenter, Shubha from Pineapple Financial.
Good morning, ladies and gentlemen. Thank you so much. Oh, I'm going to try to not walk in front of the projector, but I do like to walk around when I'm presenting, so I'm going to try to walk in front of the projector. Great conference here thus far. Great to see so many familiar faces and new faces as well. And a big shout out to Planet MicroCap, Robert, and the entire team for having us here. It's been a very well-organized presentation. So just to kick things off here from Pineapple, I just want to give you guys a story about where we were, where we are, and where we're going throughout this presentation. So I'd like to start today by talking about where we were. We started this business about 8 years ago, when at that time, my co-founders and I, we had about a decade of experience in the Canadian mortgage landscape. And throughout that time, we learned a lot of the trials and tribulations of what was happening in that industry. Very archaic, very manual, and very process-driven through slow, rigorous work. And we saw an opportunity for us to really begin digitizing and driving forward innovation into this landscape. And over the last 8 years, we've been doing just that. And there's a few things that I'm very proud of over that period of time. The first one is, as we knew we were going to be building a high-growth tech company, it was also important for us to not sacrifice growth at all costs. We wanted to ensure that we had a business model that was running parallel to that growth that was profitable. And over those first 4 years of our development, we did just that. We bootstrapped the entire development of our technology and corporate infrastructure through corporate revenue dollars, and we proved out a profitable business model for those entire first 4 years. It was at that moment in time that we realized that we had a product that had tremendous buy-in and industry adoption, and we knew that it was our moment to begin scaling that business. So we raised our first round of capital that closed in April of 2021, $9.3 million. And over the last few years, we've been strategically deploying that capital towards growth and scale. At that time, we were funding under $1 billion a year in mortgages on our platform, and we had about 200 users only represented in the province of Ontario. Today, we're fully coast to coast with over 700 brokers funding over $2 billion a year in mortgages. So I think we've been growing very well. And the other thing that I'm very proud of over these last 8 years is that the mortgage industry in Canada has probably changed more in this period of time than probably the previous 8 decades before it. And Pineapple has truly sat at the forefront of this innovation and of this change, not only ourselves through digitization and through the products that we've been rolling out, but also spurring our competitors and our peers to be better and to do better. So let's jump in and talk a little bit about the business. So who are we? So Pineapple has built a full end-to-end cloud-based enterprise management platform that manages the entire life cycle of a mortgage loan. Everything from lead inception all the way down to 25 or 30 years later in a customer life cycle, and everything in between. Compliance, fraud analysis, process management, document collection, everything is housed within one ecosystem and one environment. In order to do so, we've onboarded every single major Canadian mortgage lender onto our platform, and we've integrated with a variety of technology leaders, companies like Salesforce, Equifax, OneSpan, and Google. The mortgage market in Canada is very different than it is here, and I want to talk a little bit about the impact that we have today, but also the opportunities that we have tomorrow. The first key differential between the mortgage market in Canada and that of the US is that we don't have long-term mortgages, 25 and 30-year terms. We have 1 to 5 year term mortgages that are amortized over 25 or 30 years to keep the payments down. That means that on average, every 3.7 years, a mortgage in Canada comes up for maturity. And we as an organization that services these debts has an opportunity to have another revenue stream or another servicing opportunity or another touch point with our customer. So there's really a true cyclical reoccurring revenue that comes from mortgages over the life of this loan. And I'm going to talk a little bit specifically about some of those numbers shortly. Some of the other areas of opportunity that we see is that when we look globally across the world right now, Australia, Europe, here in the US, over 80% of mortgage consumers utilize mortgage brokers as their preferred method of getting financing. Well, in Canada today, the market share is only at about 48%. But when we dive a little bit deeper into that, we know that over 70% of buyers under the age of 45 and over 85% of first-time home buyers are choosing a mortgage broker. So not only is the business growing through our efficiencies and through our productivities, but we're also seeing our channel, our distribution channel, growing organically through the next generation of consumers and home buyers. Where do we see the potential in the market, and what do the next couple of years look like for us? Well, I want to start with new purchase opportunities. Canada currently is the fastest growing population in the world. Last year, we increased our population by 3.7%. 1.2 million immigrants came into the country, and another 1.2 million are expected to come in over the next 12 months. Statistically, 80% of new immigrants to Canada will purchase a home within 3 years of arriving. That equates to about 700,000 homes, I think 680 is the exact number, expected to be purchased by new immigrants alone over the course of the next couple of years. You couple that with the 4 million Canadians that are coming of age right now, entering the home buying stages and phases of their life, entering the workforce, having enough down payment saved up. That's about 4.7 million purchase transactions that are going to be required over the next few years. I mentioned that we don't have long-term mortgages. We have 1 to 5 year mortgages. So something amazing happened a few years ago in the world of COVID and in the pandemic. We saw interest rates fall to rock bottom lows, and we saw every Canadian that had the ability to refinance their mortgage into a 1-2 year % fixed rate mortgage. Well, what that meant is that vast majority of mortgages were then going to come up for maturity at the same time. Well, that time has now come. And it's 60% of all Canadian mortgages right now, $2.2 trillion of outstanding debt, are coming up for maturity in the next 24 months. That's $1.5 trillion of mortgages that we have an opportunity to reservice. And I just want to paint the picture of how impactful that number is. The largest year of mortgage originations in Canada was 2021, where we did about $780 billion. That included purchases as well. In the next 2 years, in the next 24 months, if nobody in Canada was to purchase a home again, and all we were to have to live off was the mortgages that were coming off maturity, well, we're almost going to do the same amount of volume as the record year of Canada, about $750 billion a year for the next couple of years. You add that with the purchases, that equates to about $2.6 trillion of mortgages that we're probably going to write in the next couple of years in Canada. Refinances are growing. There's currently $7 trillion of equity being held in Canadian real estate, much of which is being used towards renovation financing, debt consolidation, even income supplement and lifestyle supplement. We're seeing a fast-growing population of investors that are using mom and pop investment vehicles to be able to get more rental stock onto the market. Right now our government is far behind in terms of how much housing is required to facilitate the growing population. So people like myself and others have come to the table, and we're financing those individuals. And finally, reverse mortgages. Of the $7 trillion in equity that's held in Canada right now, 5.5 trillion of that is held in the baby boomer generation. And this generation is staying in their homes longer and have access to resources, but that's locked away in their homes. So we're being able to untap some of that equity and provide it to them so that they can stay in their homes, but also maintain their lifestyles through products like reverse mortgages. So what is our product? Pineapple One is our proprietary flagship platform that focuses on 3 main areas: acquisition, management, and retention. From an acquisition standpoint, the goal has been to realize that reduce the cost of customer acquisition, as well as increase the probability of close. From a management perspective, the goal has been to remove as much people power throughout the mortgage processing life cycle as possible. Today, we removed approximately 8 hours of manpower that's required for a mortgage loan. And from a retention standpoint, the goal has been to realize that full customer lifetime value. An average transaction in Canada today is about $4,500. As mentioned, the average Canadian will go through about 7 to 11 mortgage transactions in their lifetime. Their full customer lifetime value to us is $68,700 over that time frame. How do we do this? It works in 5 main ways. One, we start by targeting the clients. Here, with as little as a name and an email address that you or a mortgage broker will enter into our platform, we can begin building out a profile on that customer using third-party data connectivity that we have access to, as well as profiling that we're going to be getting from that customer and their activities. What we're doing is we're trying to actually assess who that customer is and where they fall within the mortgage life cycle. Are they a first-time home buyer? Are they a property investor? Maybe a reverse mortgage candidate? Once we've determined exactly who they are through a proprietary algorithm, we're then going to take them through a very personalized conversion campaign. And here we have a proprietary scoring mechanism. And what we're looking for is customer engagement. And as the customer gets engaged more through our scoring mechanism, we've actually been able to determine how far and when they are from a transaction. And at those periods of time, at those milestones, we're going to prompt the mortgage broker to now get in touch with them. We're going to provide them with a full profile, a history, what that customer has been engaged with, and how they can help. We're even providing mortgage brokers with sales scripts and talking points to make their jobs a lot easier. At that point, we're going to onboard that customer seamlessly into the platform. There, they'll log back into the system, and any data that we haven't collected in their profile, they can just fill in the blanks on. And at that point, all of that information gets delivered to us on the back end, where we've built a proprietary algorithm that is today providing them with an instant pre-qualification. And our instant pre-qualification algorithm is actually predicting at 100% accuracy right now. Once we have that information into our system, we can then begin processing that loan. Here, we've built out the largest digital database of mortgage policy and guidelines available in the industry. What we're able to do with that is line it up with consumer data and sift through the thousands of mortgage products that are available through the over 200 lenders in Canada and find the top 5 products that suits that customer's needs. We're able to then provide them with those options, again, through their portal. They can select exactly which one best suits them, and we can move on through the fulfillment phase. Here, through full automation, the customer can log back into their portal. They can provide all of their necessary documents to us in a secured and safe environment. That gets processed right to us. We even have technology that's analyzing it and detecting it for fraud. We'll then be able to get that up to the lenders and even integrate various stakeholders in at this point. People like realtors and lawyers can participate and play their role in the transaction, all within our ecosystem. And finally, once we get that deal closed, our final module kicks in, which is our data analytics. Here, as the first data-driven mortgage company in Canada, what we're doing is using the power of data to find opportunities that previously never existed. Let me give you a couple of real-life examples to simplify it. In today's high inflation, high interest rate world, many Canadians, I'm sure many Americans as well, have begun relying upon unsecured credit to be able to supplement their lifestyle with this higher cost of living. Well, through our data partnerships at Equifax, we're able to assess and analyze which one of these Canadians have incurred significant high interest debt. And we're able to cross-reference them to see who has the eligible equity to be able to consolidate some of that 19, 25, 30% interest rate debt into lower 4, 5, 6% mortgage debt, saving them thousands of dollars in interest over the course of those loans. So we're using data to find these opportunities to reservice, re-engage these customers, but more specifically, drive revenue back to our business. As a technology company, Pineapple One is obviously our flagship product, but we've built many other modules. A couple of things I want to highlight on this slide is the integration of artificial intelligence, which has been about 3 years in the making for our business when we began completely restructuring our data hierarchy. And earlier this year, we were very proud to have launched Maui, which is our artificial intelligence module. Today, what we're doing is creating generative websites for our mortgage brokers and agents, help their search engine optimization, help streamline their lead generation. But into the future, we're getting into loan adjudication right now. We're getting into customer servicing, and we're going to see more and more AI modules layered into our platform as time goes on. And everything in our system is housed internally, which keeps all of our data safe and secure. Our business model is fairly straightforward, follows a 3-pronged revenue approach. A part of it is variable sales revenue, and a part of it is reoccurring subscription revenue. So on the front end there, currently today, we're earning 104 basis points on average for every dollar we fund on the platform. On the reoccurring revenue side, we earn $150 Canadian per month, equates about to $118 US per month per user on our platform. And on top of that, we also have what we call an underwriting fee. So this is a technology-enabled pre-underwriting center where our mortgage brokers have the opportunity to submit their loans prior to them going to any one of the major Canadian lenders. What this allows us to do is help do a document validation and verification and ensure that that loan has a higher probability of close, just streamlining the process for everybody. And for us to do that, we charge $500 Canadian, about $395 US. Looking forward to our profit and margins, we have a couple areas that we're focusing on, how we feel we can grow this. Obviously through the use of technology, through compounding our sales funnel, creating more efficiencies and productivity, through our Maui integration with the websites, as well as integrating it into our entire onboarding process, we've actually been able to reduce the manual onboarding time of bringing in a broker onto our platform by almost 92%. Currently, it takes approximately 10 minutes of manpower to bring somebody onto our platform, which is, incredible. And we obviously see a lot of that productivity happening in other areas of our business. But a big place of where we see us increasing profitability and margins is actually the addition of new revenue verticals. So we're in the process and should be launching probably in the next couple of weeks an insurance vertical. So we've opened Pineapple Insurance, which is a wholly owned subsidiary of Pineapple Financial. And it's a regulatory requirement in Canada that all mortgage approvals come with an insurance offering. This has typically been done through third-party providers, and this is for life and creditor to protect the liability that the borrower is about to take. So as third-party providers, they had a lock on this market. What we've been able to do is negotiate with Industrial Alliance, one of the largest insurance underwriters in Canada, and they've backed us to be able to provide our own insurance product to each of the mortgage approvals that are going to be coming on our platform. So this is going to be launching very shortly, and we expect this to be a very significant increase, not just to revenue, but it's very margin-rich, bottom-line heavy revenue. We flipped the margin on this revenue completely, and we'll be able to drive that straight to the bottom line. And finally, through scale and expansion. As mentioned, we're growing across Canada right now, and our current operating expenses have the ability to withstand growth about 6-7 times our current revenues. So as we continue to scale and grow our business, we'll see our expenses staying very fixed and our revenues continue to grow and thrive. So as we scale this business over the next couple of years, we'll certainly be making an impact there. I just want to talk a little bit about our financials. So we're doing approximately $20 million in gross revenue. And, our last quarter, if you look on our public filing on the 10Q, we did about 60%, I think 59% increase on year over year for that quarter. So as we're starting to see a bit of a market shift right now in Canada, we faced a lot of headwinds over the last couple of years with high interest rates and with inflation, low consumer sentiment. We're starting to see a lot of that change right now, and we're really optimistic over the next couple of years what that's going to look like for us. We've doubled our user base in this period of time. So we think once we get out of these headwinds and start catching some tailwinds, we have an opportunity to really lift off and take off. We have an incredible team that runs this business. You've had an opportunity to hear from myself, but formally, my name is Shubha Dasgupta. I'm the CEO and co-founder. I've been in the mortgage space for 18 years now, sales and marketing, technology and automation, securitizations of loans, working on the capital markets side. You can find out a lot about me online or on our website. So what I love to share in these presentations is maybe something that you can't learn about me online. So just something that you wouldn't learn about me is that I'm a very avid philanthropist, heavily focused on cancer charities, sat on the board of some of the largest cancer charities in North America. I've raised over $6 million for this cause, and I'm a loving father of 2 children and a wife. My co-founder, business partner, and our COO, Kendall Marin, has been in the mortgage space for about 15 years, an incredible operational mind. He actually spent a decade at Bell Canada, which is the largest telecom in Canada, where he honed his operational excellence and brought a lot of that skill set over to our business to really build our internal infrastructure. What would you not learn about him online? Well, he started his first business at the age of 16 and quickly grew by the age of 20 to be one of the biggest entertainment and nightlife promoters in Canada. So entrepreneurial spirit runs through his blood. Krista Mitchell, our CSO, came to us about 3 years ago from our largest competitor, where she grew them by about $6 billion in a few years. She started at in that company as the receptionist and grew all the way to VP of operations, but she also brings an incredible background in computer sciences. She actually had a hand in building the industry's first enterprise management platform. So she's brought a lot of those learnings and background to us and our business here today. And finally, Sarfraz Habib, our Chief Financial Officer. over 25 years of public and private company accounting. And to us, he brings just incredible financial governance and structure to the business. And what wouldn't you learn about the two of them? Well, Krista and I have actually been friends for 16 years, and we met doing cancer charity events together. Her company, her previous company, was a big supporter of one of the companies I was on, or sorry, organizations I was on the board of. And Sarfraz Habib, well, this is probably the most dedicated father I've ever met. His daughter goes to school, university 5 hours away from us, and anytime she calls, he goes, which is about every weekend to go see her. So just an incredibly dedicated father. We're rounded out by an incredible board led by Drew Green. He's currently the CEO of Indochino, the made-to-measure suit and apparel brand, which is the largest men's apparel brand growing in the world today. He's grown and built over 25 high-growth tech companies, exited many of them successfully. And what does he bring to our company? Two things: incredible board governance, as well as mentorship for our management and team. Nima Beshrat at the end there is currently the CEO of Centurion One Capital. And what he brings to our team is just, background in finance and capital markets. So he adds that experience to us. And Paul Barron and Tassis Giannakakis. Paul is currently the president of the Toronto Real Estate Board, which is the largest real estate board in North America, where he represents almost 80,000 realtors. And together, he and Tassis own the largest real estate firm in Canada. And you might have seen a press release recently where we were able to integrate our platform into theirs. And now we have a full flow through of their $6 billion of sales that happens annually right directly into our mortgage system. I got the 5-minute warning, so I'm going to pause there. And thank you all once again for being a part of this presentation. I'd love to open the floor to any questions you might have. Yeah, so I mean, when interest rates were high over the course of the last couple of years, it certainly put some pressure on the purchase side of the business. One thing about the Canadian market that differs is that we have more stability in the mortgage market, given the short-term nature. So even with high interest rates, when your mortgage comes up for maturity, you have no choice but to refinance or renew that mortgage, regardless of what's happening in the external environment. So we're still generating revenue from that side. But high interest rates certainly depress the purchase market, and we've seen the impact of that. In December, when the U.S. Fed announced that, they were potentially starting to look at rate cuts for 2024, it crashed the bond market in Canada. So we've seen fixed rates drop by about a full percentage point. Right now, we're seeing 5-year fixed rates as low as, 4.6, 4.7%. We're expecting to see Bank of Canada cut interest rates June or July of this year. So we're thinking a lot of that pressure is behind us right now. And we're already seeing that with a 30% increase in purchase activity in the earlier part of this year. Yeah, absolutely. So the competitive landscape in Canada for us, we're very novel in the space of building a full end-to-end enterprise platform. So I like to break our competitive landscape up into 3 buckets, more specifically. So the first bucket are traditional mortgage brokerages and mortgage companies. And the reason why they're a competitor is that's who we're displacing. So we're displacing the old manual processes that they bring to the table, more brick and mortar style of businesses, and bringing those same people onto our platform for a more digitized experience. We have large competitors like Dominion Lending Centers, Mortgage Alliance, and Mortgage Architects that are kind of leading the path. The second group of competitors that I look at are digital mortgage companies that are doing something similar to us, but a little bit different in the sense that they don't have full end-to-end management. What they're doing is following a more D2C, direct-to-consumer model. We chose mortgage brokers specifically as our distribution channel for a couple of reasons. Number one, the direct-to-consumer model in Canada is very expensive and very time-consuming. I mean, our next closest digital mortgage competitor is doing less than 1/10 of the mortgage volume that we're doing, even though they've been around longer than us. So we've been able to scale a lot faster. And second, we've just found that the direct-to-consumer model just hasn't been adopted as well through the Canadian consumer. They like to have at least a person to be able to validate some of that information, but they're competitors nonetheless. And the third bucket of competitors that I like to talk about are technology companies that are building tech for the mortgage landscape. And our key competitive advantage over them is that we've built a full ecosystem with integration on the entirety of the process. Most of these other technology companies are building solutions to pieces of problems that exist, but there's no integration beyond that. So they might have a great, mortgage application solution, but then beyond that, there's nowhere for that data to flow or to integrate. So that's kind of what the competitive landscape looks like. Probably time for one, maybe two more questions. So we're actually in the process of making the correct modifications. So originally we had about 3 to 5 years on our US expansion plans. We've since accelerated that. So as we've begun expanding across Canada, one of the ways you can be on our platform is white labeling it as an independent mortgage firm. So we have a firm in Alberta that's also licensed in Florida and Texas, and they've fallen in love with the platform and what it's done for their business. So they've asked us to be pioneers of it. So our team's just kind of working on the strategy on making the modifications, and we're hoping in the next 12 months we can bring it here to the US as well. Well, I think that wraps up how much time we've had. So thank you all once again for your time, and look forward to connecting with you.